How much income do you really need to buy a $500K home in 2026? Everyone wants to know if they can afford a $500,000 home. And everyone is getting the wrong answer, because the number the bank approves you for and the number you can actually afford without destroying your life, those are two very different numbers. And I'm going to show you the real math right now, no fluff. Hi there. I'm Ella Gurfinkel, Senior Loan Officer, 30 years in the biz, over 2,000 families served. I've pre-approved people who had no business buying at that price point, and I've seen people talk themselves out of buying when they were actually absolutely ready. Today, I hope to fix both problems. Let's get into it. Here's the thing about the $500,000 question. It sounds simple. Can I afford it? But the answer depends on about 6 different variables that most people, and honestly, a whole lot of lenders, gloss right over. Your income, your debt, your down payment, your credit score, the state you're buying in, and the loan type you're using. Change any of those variables and the answer changes completely. So let's build this from the ground up, because when you understand the actual formula the banks use, and I mean the real formula, not the watered down version, you stop guessing and you start making real decisions. Here is what's wild. Nearly 2/3 of FHA borrowers right now are spending more than 43% of their pre-tax income on mortgage payments. Let me say it again, pre-tax. That is the threshold the FHA itself considers risky, not some conservative financial advisor, the FHA, their own benchmark. And 65% of their borrowers are blowing past it. Meanwhile, 18% of D.R. Horton FHA borrowers are already underwater on homes they bought in the last 2 years because they got approved for a payment they could technically qualify for, not the one they could actually sustain. Getting approved is not the same as being able to afford it. And today I'm going to show you exactly where that line is. Step 1, what does a $500,000 home actually cost you per month? Let's run the real numbers. With a 3.5% down payment, that's $17,500, and a 6% interest rate, your principal and interest payment comes out to roughly $2,900 a month. But that is not your full payment, not even close. Add property taxes, add homeowners insurance, and mortgage insurance, because you're putting down less than 20% and it's an FHA loan. So that mortgage insurance is gonna run about $220 a month on an FHA loan. When you add it all up, you're looking at a total monthly payment of around $3,800. That's all inclusive. And here is where it gets real. That $3,800 is before your car payment, before your student loan, before your credit card minimums, before anything else you owe every single month. Step 2, the formula the bankers actually use. Lenders allow up to 50% of your gross monthly income to go towards total monthly debt on conventional loans. That includes your future mortgage payment plus every other debt obligation you carry. So the math is simple. Add up all your monthly debt payments, including that $3,800 a month mortgage, and multiply it by 2. That's the minimum monthly income you need to qualify. Let me give you real examples. If you have 0 other debt, no car payment, no student loans, nothing, you need about $7,600 a month in gross income. That's roughly $91,000 a year. If you have $1,000 a month in other debt, a car payment, maybe a student loan, you need about $9,600 a month. So that's around $115,000 a year. If you're carrying $1,500 in monthly debt, you now need $10,600 a month, about $127,000 a year. And at $2,000 in monthly debt, you're looking at $11,600 a month, roughly $139,000 a year in gross income just to qualify. The more debt you carry, the more income you need every single time. Step 3, what the approval amount doesn't tell you. This is the part that keeps me up at night, because the bank is approving you based on your gross income, pre-tax, before your 401k contribution comes out, before health insurance, before any of the real deductions that determine what actually hits your bank account every month. So if you make $10,000 a month gross and you're approved for a payment that uses 45% of that, that's $4,500 going to debt. But your take home might be $7,000, which means that you're actually spending 64% of your real money on debt payments. That's not a mortgage, that's a trap. A much smarter rule, the 30% rule. Keep your total housing payment, mortgage, taxes, insurance at or below 30% of your actual take home pay, not your gross, your take home. That's the number that tells you whether you'll be comfortable or house poor. Step 4, the variables that change everything. Down payment. The more you put down, the lower your loan amount, the lower your monthly payment, and the less income you need to qualify. On a $500,000 home, the difference between 3.5% down and 10% down is about $300 a month in payment. That is real. State matters enormously because property taxes in New Jersey versus property taxes in Arizona, we're talking potentially $500 to $800 a month difference on the same home price. That directly affects your loan qualifying. Loan type. FHA and VA are the most lenient on debt to income. Conventional is in the middle. USDA is the strictest. Your housing payment cannot exceed 31% of gross income, and total debt can't exceed 41%. Tightest box in the business. Credit score. A 780 or above gets you the best rate available. A 680 gets you most of your options. Below 620, and you're paying for it in rate, in fees, and in limited program access. And the lower you go, the worse it gets. A $500,000 home is absolutely achievable for a lot of people in 2026, but only if you go in with the real numbers, not the marketing numbers, not the approval letter numbers, not the number that makes you feel good for 5 minutes before reality hits. If you want me to run your specific numbers, your income, your debt, your credit, your state, and tell you exactly where you stand and what it would take to get to that $500K home, book a free call with me. The link is below. No pressure, no pitch, just honest math. Math has no emotion because that's the only thing that actually gets you into a home you can't afford and keep. I'll see you in the next one.